Check in our friends at CME Group. Tim Evans joining us here from the side of the floor there. Tim, thanks for joining us this morning, and I haven't had a chance to talk to you for a while. Big day in Chicago here. Hope you have good weather for all the festivities at Wrigley.
Yeah, it's a big day and definitely a nice change, some beautiful weather here in the mid-70s, so no complaints here.
I understand that. All right, grain trade here, we just gave the export numbers as you heard, but tomorrow the numbers coming from USDA, the monthly report, not expecting any big surprises there, I wouldn't think.
No, I mean, I think, the market has pretty much baked into the pie that we're going to see, some potential jumps and Brazilian and Argentinian production, especially for soybeans. World stocks, most people are expecting about 447 versus 435 million last month. So, I mean, I think that's pretty much baked into the pie. My view, though, is that we could possibly see a carryover number a little less than kind of what the market's currently looking for. I mean, we have seen some pretty good demand numbers here over the last week, so we think that could shave a little bit off here on carry out when that comes out tomorrow.
Yeah, and that certainly would make a big difference here. They've already traded a number over 2.3 billion mainly. Is that kind of the average trade estimate?
That's correct, yes.
Now look at soybeans here. We already know what's going on in South America, shifting to weather here, and the acreage report and that stocks report at the end of March. I guess they're kind of now plugging those stocks numbers into these ending numbers tomorrow. Is that right?
Yeah, that's absolutely correct. I mean, I really think, again, I mean, a lot of this is baked into the pie. I mean, I think this report tomorrow is going to finally allow us to begin to shift our focus to new crop, begin to look at the acreage numbers and how that, those acres are being allocated toward corn and soybeans. And obviously, we're going to be entering into a weather market. We're getting corn into the ground. The first weekly progress report comes out this afternoon, so I think the market's finally going to be able to shift its focus a bit.
And some say that wheat could be a sleeper in here. What's Tim Evans think about the wheat trade?
I mean, it's been a pretty quiet trade. My view is that's going to really come down to weather as well. We're going to need to see, possibly some souring weather in the United States, maybe in the Black Sea region. But, I think we're going to need some type of weather event to get this market moving to the upside.
About 3 higher in Chicago, 3.5 higher Kansas City. The Minneapolis trade hasn't exactly been step for step. In fact, a little bit weaker. Why has Minneapolis, that spring wheat, been so under some pressure, while Kansas City, the hard red and soft red, have been a little bit stronger, Tim?
Well, I mean, you're comparing supplies, and you're comparing basically weather from differing regions. So, when you have domestic weather differing from, international weather, you're going to get those spread differentials that widen.
Very good. Tim Evans from Longleaf Trading. He's the owner, and in Chicago Live, we'll come back and talk livestock with Tim, cattle and hog trade. We continue on this Easter week, Monday. Tim Evans rejoining us live from the floor at the CME Group, now looking at the livestock trade. Tim, thanks for all the comments here in the grain trade, looking ahead tomorrow. In that livestock trade, I imagine there are numbers they can pull out of that report as well tomorrow that they're watching in the beef trade. Let's start out with cattle. Your thoughts there?
Well, I mean, one thing that's, more than obvious is that the cash trends have clearly been down here over the last couple of weeks in the cattle trade. Beef prices are at the lowest levels we've seen since March 1st. But futures have been trading at a significant discount to cash. So, really, when you're trading at that big significant discount that we've been trading at, that really leaves the market susceptible to seeing rallies on really anything that can spark those rallies. So I think the moves, that we saw going into the end of last week and here as we're starting the week, it's simply just a function of the cash and futures differential.
Okay. And I'll get the numbers for those folks tuning in or listening in as well, live cattle and feeder cattle. But Tim, I want to get your thoughts in the pork trade here. Obviously, a lot of folks will say that the futures look oversold, we can bounce higher, and we may do that here. History says, mid-April to mid-May is a time we can get a bounce. Do you agree?
I mean, seasonally, yeah. I mean, historically, this is a time that you would see that. However, I think this year's a bit unique in the level of pork production, that we saw in winter and the early spring, which was deviated from kind of the historical norms. While I do think the market may be a bit technically oversold, I just don't think fundamentally the market can really support a dynamic move higher. So, you know, if the hog trade follows the cattle trade higher, I think that's actually an opportunity to come in and sell that rally.
Very good. Well, thanks for your time here. Again, a big day in Chicago. Thanks for your time here today, and we'll keep in touch, Tim.
All right, go Cubs.
Thank you. Yeah, exactly right. Tim Evans, Longleaf Trading. He's the owner there, live on the edge of the floor at CME Group.